Dale, can
Hi,
you hear
Lane.
me?
How are you?
I'm great. How about yourself?
Good. Nice to meet you, Lane.
Nice to meet you
I
as
was
well.
re
Sorry,
I was
sorry for the
reading a little.
technical delay.
No problem. That's showbiz.
Yeah.
So I was reading a little bit of your bio, and it's interesting. I usually start off with asking people who they blame for them being in this industry, and you had it came. You had genetically you ended up being in this industry. Your father was a great influence on you. Why don't you tell us a little bit about your dad and how you went to all these trader, investigating the trading industry with him and watching over his shoulder as he developed this software that you currently use. And he was a pioneer in the trading software industry. So why don't we start there?
Yeah, well, in terms of who to blame, yeah, I've got one main target that I can blame. It's my dad. But no, it's actually it's been a blessing in so many ways. Well,
Cool.
first of all, it a lot of kids and their parents, maybe they have stuff in common when they're younger. Then they go off to school and they start to become influenced by their friends, and they go in all different directions. For me, um, I started working with my dad when I was 6 years old, and when I tell people that, a lot of people laugh, like, "Yeah, what's a 6-year-old do?" But you know what? A 6-year-old can clean toilets really well. A 6-year-old can take the trash out really well. So my official title was facilities manager, which is a
You were the
glorified.
janitor. You were the
Yeah,
janitor.
that's it.
Okay.
That was the janitor. But you know what? I was a
Uh,
darn good janitor, and
your dad believe. Okay, great. So you weren't. He didn't silver spoon you. He made you start at the bottom.
yeah, very bottom,
All
which is
right.
fine. But the funny thing is that even going into the office, because at the time the company was very small. We have a ranch just outside of Tampa, Florida, and the office was actually located on the property. And so what would happen is I'd go into the office during work hours. I'd clean the toilets, take the trash out, but kind of through osmosis, I was learning. I was hearing conversations that were happening with the programmers. I was hearing conversations with the customers. And it was kind of like a brainwashing thing that was happening behind the scenes, I guess. Everyone knew but me. And I just really enjoyed it. People say they got bit by the bug. I really got bit by the bug without even realizing it. And then I kind of moved up the ladder from facilities manager to formatting floppy disks, because back in the day we were sending out software on 5¼ inch floppy disks, and you couldn't buy disks that were already formatted. Each one had to be individually and manually formatted, and that was my job.
So did you have an itchy trigger finger and wanted to put on your first trade at an age where most kids were only interested in what they were going to get for their bar mitzvah or when they were going to get their driver's license? How old were you when you did your first trade?
I remember very distinctly my dad and I, when I was about 11, 12 years old, opening an IRA account. And, I didn't really know much about it at the time, but he said, look, a lot of people, they don't think about this stuff until they're older. And you've been working, you've been earning wages, not much. I was getting, 5 cents a disc for every disc I formatted. But he said, look, we're going to get you set up with an IRA account, and as you make money each year, you're going to be able to put money away. And he explained how it's tax deferred and how all that works. And yeah, my dad did all the right things in terms of instilling those values and work ethic and saving and learning new things. And I really enjoyed that. I really appreciated that. And so it was a really easy decision for me. I started programming our first website in 1995, so I really got excited by the internet. And then through high school, I was only going to school half a day, and I was going to work the other half a day. So it was really neat because I went and took the required courses. I took some night classes, some summer school, just to get all the credits I needed so I could afford to take the time off from high school. And so it really started working almost full time through high school. And then my mom said, after I graduated high school, she goes, my mom and dad each have several college degrees. My dad's got an MBA, and he's got an MS degree. I mean, he's just very well educated people. And I said, look, I don't have any interest in going to college. I know what I want to do. I know what my passion is, and I've been honing and developing my skills to do that. And my mom said, look, you got to go take a class. So I signed up for a night class, a psychology course, and I just couldn't do it. It wasn't my passion, and I wasn't excited by it. And so I learned that if there's something that I'm passionate about, man, I can do it. I can do anything I'm passionate about, but it's really hard to get behind something that you don't believe in or you're not excited about. And that became clear to me then.
Love what you do, and the money will follow. Chase the money, and it might be elusive. So, so tell me about how you're carrying on the tradition. Your website is tradertech.com. I've noticed the software that you guys market. In fact, I believe when I had Julie Saltzman on, she was showing your software. It has a predictive quality to it. So tell me about the evolution of this software. How many upgrades have there been over the years?
Yeah. Okay. Well, let me back up. In 1983, my dad came out with the first software program in the world that worked on a personal computer that was able to perform backtesting and historical simulations, so that you could, test a trading idea or create a trading system and see how it would perform by looking backwards and get some insight into how it might work going forward. So in 1983, he came out with that. It was called Profit Taker. Wildly successful. I mean, it just really disrupted the whole industry, which was in its very primitive state to begin with. Before that, it was just some basic charting software, and people were using calculators and graph paper. Well, now you had software that could allow you to test ideas, and it was a very sophisticated software at the time. Even today, it's more sophisticated than other software programs are, 30 some odd years later. But in the mid-1980s, my dad really started to really latch onto the idea of the fact that the markets were becoming more global. He wrote a lot of articles in the 80s where he said, it's becoming a global economy. It's becoming a one world market, he said. And so as a trader and as a technical analyst, he became disillusioned to some degree with his own software because it was only doing single market analysis. Profit Taker looked at soybeans, or it looked at a currency market, or it looked at a particular precious metal. But what it didn't do is it didn't analyze the impacts and the influences that other markets could have on the target market that one would want to trade. So around the mid-1980s, he started really investigating the concept of inter-market analysis. And in 1987, when we saw what happened with the stock market crash and how it's just literally swept across the world, that was just a nail in the coffin. That's where he said, all right, this whole idea that I've been thinking about, in terms of markets being interrelated and how they can impact each other, he's like, okay, it's for sure. It's not just a hypothesis. It's definite. It's for sure. It's a fact. And so in 1988, he came out with a primitive version of Vantage Point that was just doing some correlational analysis. Not real sophisticated, but in his mind, but much more sophisticated compared to everything else out there. But in 1991, that's when Vantage Point came out, and we started marketing the Vantage Point software, making it available to individual traders and investors. We did it for the Swiss franc at the time, the Deutschmark, the 30-year T-bonds, and the S&P 500. There was no E-mini at the time. And what it was actually doing, Dale, is if someone was trading, let's say, T-bonds, the software was looking at 9 other markets. 9 other markets that have been statistically proven to have an impact on T-bonds, for example. And that was the beginning of taking this concept of intermarket analysis, not just looking at, let's say, 2 charts side by side, but really doing in-depth analysis, looking at the open, the high, the low, the close, volume, open interest, all of these individual pieces of data, and using mathematics, artificial intelligence, neural networks to sift through all of that data to then come to a decision of, okay, based on everything that's happening around the world in these related markets, where are T-bonds going to go? Short term, over the next 24, 48, 36, just the next couple of days.
So really, you guys were, before it became a popular word, Lane, you were developing your own algo.
Yeah. It's now you put on the news, everyone's talking about the global economy. I mean, literally everybody talks about that. But at the time, back in the late 80s and the early 90s, my dad was very heavy into intermarket analysis. John Murphy, who's a friend of the family's, he was very much into it and had written a book on it. And you know, John Murphy wrote in the book. He said, you know, what Lou has done is he's taken the concept of intermarket analysis, which, you know, traditionally was done by looking at two charts side by side, you know, very, very primitive, and computerized it, mechanized it. It made it more intelligent, which allows you to then make better trading decisions because you're considering the big picture. So in other words, the more information you have, as long as it doesn't overwhelm you and as long as it's accurate, the better a decision you'll be able to make. That's the whole concept.
Kind of a holistic approach to trading an individual instrument.
Yeah, you think of it this way, Dale. It's like taking the blinders off. So if you are, you know, those horses like in New York City, they've got the blinders on. That's because they don't want the horses to get distracted. They don't want them to get spooked. They want them just focus on walking straight ahead. Well, that's great unless there's something that's sneaking up behind you, something that's coming from the left, something that's coming at the right. Then you're totally oblivious to those other factors. And so what we've done is we've essentially taken the blinders off for traders so they can see the big picture, they can see what's really happening beneath the surface, and that allows them to make better trading decisions. Maybe some of those decisions may be, I'm not going to take this trade at all because the trend is going to go sideways or it's going to be, you know, just choppy. Okay, that's a good decision. Stay out. Another decision may be, you know, get in. Whatever the case is, you're able to make a better decision.
How about on big red days like a potential interest rate hike for the first time in 9 years? How does the program adapt to a situation like that? To me, it's a, you know, maybe just have a toe in the water type of trade, but I'd rather react to the reaction than predict the reaction.
Yeah, you know, each person's different. The nice thing about our software is it's not a trading system, so it's not something you just follow blindly and buy because it says buy and sell because it says sell. The idea and what we're really doing is we're providing people with information, and when you combine accurate, consistent information with common sense, I think that's really the winning combination. So, for example, let's say there's a fundamental report coming out. We know when they're going to come out. They're always, you know, pre-scheduled, pre-announced. Well, then you have to just look at it and say, what's my risk propensity? You know, am I in a trade? Do I maybe want to tighten up on my stops? Am I not in a trade? Maybe I want to just kind of wait, let the dust settle, see what happens. Those are individual decisions that each person can make. So while the software can't analyze those types of those impacts, what's really interesting is that even when there are fundamental events that happen, a lot of times the software is actually on the right side of the market because it's not just looking at that one market, because it is looking at interest rates as a whole. It is looking at currencies. It is looking at precious metals and markets around the world. So a lot of people trade Apple. So if our software is forecasting the price of Apple, it's looking now, today, as opposed to back in the early 90s, instead of looking at 9 related markets, the software is looking at over 30 markets that can drive and impact the price of Apple.
Wow. You know, they say a picture speaks 1,000 words. You know how to screen share here on Hangout, and maybe we could look at your screen and take a look at the software. You go up to the upper left-hand corner, and if you scroll there, you'll see a green box. I think you're doing it.
All right. Cool. Yeah, I got it.
Okay. All right, beautiful. Okay, so we're looking at the software here on the Euro, and why don't you explain it? My guess is that the last candle on the right is predictive.
Yeah. Even before I do that, let me show you something really interesting. Over on the left-hand side of the screen, I'm going to right-click on the properties for the Euro-US dollar. Okay. This is the secret sauce here. Okay, so this is really important because anyone can draw lines on a chart. It's what's behind those lines.
You're making me hungry.
Okay, good. Hey, you know, this gets me excited too. You know, this is the thing that really gets me going because it's what's under the hood that's exciting. The chart, the lines, the blue, the black, yeah, that's all fine and dandy. It's what they represent. It's the culmination. But here's what's actually happening. Under the hood, what we're actually doing is we're forecasting for the Euro-US dollar. But what you can see is that there are about 30 different markets here. Now, some of these are ETFs. These are ETFs. Here are other Forex pairs, both majors and cross pairs. You've got some currency futures. You've got energies like the light sweet crude, natural gas. You've got indices, the Dow, the E-mini. Here's interest rates, 10-year T-note. You even got some other markets that you think, well, gosh, I don't even know how. Why would lean hogs be considered? Gold, you know, Rockwell Automation. These are individual stocks in the healthcare sector, conglomerates, technology, transportation. There are
so everything on the left-hand side in that box are inputs into the predictive nature of what the euro might do.
Exactly. So what we're doing for each one of those markets, we're looking at the open, the high, the low, the close, volume if it's a stock or a commodity, open interest if it's a commodity or futures market. So there are literally hundreds of data points that are being considered. This is where the artificial intelligence comes in. The neural networks look at all that data, which as a human we wouldn't know what to do with it, and it looks for these hidden patterns and these relationships, and it says, based on what's happening in all of these other markets, what's that going to do to the price of the euro? How is that going to push the euro either up, down, or sideways, and to what degree? And that's now what we're looking at in the software. So I'll give you a quick interpretation. It's actually pretty simple. I've got a 5-year-old daughter and a 2.5-year-old daughter. My 5-year-old, when she was about 3 years old, she would say, I want to play Vantage Point. I want to play Vantage Point. She thinks it's a game.
Yeah.
Because, and I told her, well, it is, and I'm trying to do what my dad did with me. Can I get her interested in it early? But I told her, when you see that blue line crossing above the black line, tells you the trend is expected to go up. It may or it may not. Chances are it will. It's up to 86% accurate. When the blue line crosses below the black line, chances are the market's going to trend down. Doesn't always happen, but if you've got 86% odds in your favor, I'd say that's pretty
your hit rate? Is that your hit rate across all instruments, 86%?
Yeah, we've got some that are higher, some that are lower. We have nothing that's below 70%. Everything that we forecast for, and we don't forecast for everything in the world. We forecast for a couple thousand symbols, though. Everything is at least 70%. The average is in the 80s, and we even have some that are higher than 86. So, but that's the average that we fall into over consistent periods of time, over years, not just like this week or last week. But we've had PhDs in mathematics and computer scientists and even professional traders who have gone and independently audited the accuracy and have confirmed and verified that it really is that accurate. And so here's what happens, Dale, is this blue line is created after all of the intermarket analysis is done. All of those other markets are considered and analyzed. The blue line is not your typical moving average. The blue line is a predictive moving average. This is something that we've patented. So we have 2 patents. One of the patents is on the way that we select those intermarkets, those 30 markets that I showed you that relate to the target market, in this case the euro. And the second patent that we hold is on how we're able to take a traditional technical indicator like a moving average and actually predict it into the future. And you may ask, well, why would you want to predict the moving average? Well, by predicting the moving average, in many cases you eliminate or at least reduce the lag effect. That's the big criticism of moving averages, right? They lag the market. So if you can predict it, you've now reduced the lag, in some cases eliminated it, and that allows you to catch those turning points, those trend changes, at the time that they're about to happen versus finding out about it several days too late, after the train's left the station. So this blue line is the predicted moving average. The black line is an actual moving average, and you're just looking for those intersections. And so if you look at the far left of my screen, when the blue line crossed below, that was the software's indication that the trend would go down, and you can see, the trend went down nicely. When the blue line then crossed above the black line, that was the indication that that downtrend was over, and a new trend was developing, this time to the upside. And you can see there's a really big day. It looks like it was December.
That was Draghi, the ECB, that green candle there.
Yep, right there. So that was December 3rd. And again, the software couldn't have predicted that it would have been such a huge day that day. But as I said earlier, oftentimes the software is going to have you on the right side. You can see that a couple days before that is when the software first indicated the trend to start going up. So the beautiful thing is that you've got these 2 different things both working in your favor. You're analyzing the euro from a global perspective. You're not just looking at data on the euro. And you've actually got a leading indicator that can give you advance warning of these trend changes so that you can position yourself properly to profit from them.
How would you have handled this particular green candle when your predictive moving average moved up, got you long the day before the big green candle? We took out the previous day's low before the reversal. Would that have stopped you out, and then you had to recommit once we got back inside of that channel?
Possibly. I'm sure that it could have stopped some people out, probably with a pretty nice profit. But it depends on how tight or how wide you set your stops. Again, it's not a trading system, so it doesn't dictate to you, you must put your stop here or you must put your stop there. which was by design. My father could have very easily developed this into a system. The problem with systems, in my opinion and my dad's opinion, is that it's not a one size fits all. If your account size is 5,000 versus someone who's got a $500,000 account, I would venture to say that they're going to make different decisions about where they place their stops and how they place their stops. So what we're doing here is we're saying the trend direction is going to be up over the next several days. So you're immediately thinking, okay, I need to make sure I'm in a long position so I can capitalize on this. Then what the software does is it also gives you what the next day's trading range is expected to be, and that's what you use to set your stop. So remember earlier you said that the candle on the far right is a predictive candle?
Yeah,
you're absolutely right. So what that is that's today's predicted trading range. So every day, not only does the software tell you the direction is expected to be up or down, and to what degree, either up a little bit or up a lot, down a little bit, down a lot, but it also says, and here's the range that the market is likely to stay within. It's not always right. It's not going to be 100% accurate, but typically the market's going to stay pretty close to that range. So if you're in a long position, what you want to do is you want to look at that predicted low for the day and set your stop below that. You want to give the market some room to breathe. On the flip side, if you're in a short position, you look at that predicted high and you set your stop above that. Again, give the market some breathing room. And that's how a lot of our customers will use that if they're swing trading. We have customers who day trade as well. And so what they do for the day trades is they're looking at the predicted high and low as possible entry or exit points for the day, combining that with the predicted trend direction for the day.
Okay, can they break it down to different time frames?
Everything is done on daily bars, and everything is on an end-of-day basis. And we've thought about doing something maybe on an intraday basis, but the feedback we've gotten from a lot of our customers is they don't want to be chained to the computer. They want that freedom. If they can come and spend 10 minutes each night looking at this chart to determine, should I get in, should I get out, should I just stay in the position I'm in, they want low maintenance, minimal effort, and that's how we've designed it. You can see the software is very clean, very intuitive, and not very time consuming, and all of that takes a lot of work. It's easy to make something that's really complicated and hard to use. It is very difficult to make something that's very complicated easy to use, and that's what we've really been focused on, is how can we give people the most accurate and consistent information and do it in a way that it's intuitive, easy, and not time consuming for them.
So you have a Forrest Gump tool. Do you train people to use this? Do you have training?
Oh yeah, we do offer training. Some of the people take us up on the training. Maybe they're new to trading in general and they need some feedback or some guidance as to what does this mean, what does that mean, how does this work. But anyone who gets the software, I'd say within a couple days to a week, working with their relationship account manager. Everyone gets a relationship account manager when they get the software. It's in our best interest to make sure that every customer that gets the software knows how to use it and is successful with it, because we have a lot of customers who might trade stocks and also want to get into Forex, or who trade Forex but might want to get into futures. We have software that covers all of those areas. Most often somebody will start in a particular area, let's say like stocks, make money with the software, really get comfortable with it and say, I've done really well with the software, I understand it, I'm making money, my account has grown, my confidence has grown. Tell me, how does it work with Forex? How does it work with futures? And so, we've just learned over the years that if we can do everything in our power to ensure our customers are successful, they're going to come back, they're going to buy more software from us, and that allows us to continue to fuel our research and development efforts, because we have a R&D team. We've got some really smart guys on the team. It's a very expensive research and development effort that we're constantly engaged in. But what's nice is that as we make new developments, as the software becomes more accurate, as the software becomes easier to use, as market conditions change and the software is adjusted to account for those changes in the markets, we make upgrades available to our customers, and it's very minimal cost. It can be very inexpensive. But you say, well, if my accuracy just went up 3%, 4%, 5%, gosh, I'd give any amount of money for that. So it's just nice because as new customers come on board, that fuels our research and development effort, and then we come out with upgrades and enhancements to the software.
Well, I want to thank you so much, Lane, for joining us today and talking about generational development of your software. What's your most precious currency?
Well, I think the euro US dollar is the one that most people focus on. I have another chart I'll show you real fast.
Okay,
Um,
because my most precious currency is time,
oh,
and that's why
well, that's
I was gonna thank you for spending some of your most precious currency with us. If you want to go ahead and show the
yeah.
euro, go ahead.
I always think about time as my most precious commodity. So it's just a semantic.
Okay,
I
all
always
right,
think,
it
like,
is.
certain commodities, they can make more of it. Others, there's a finite amount, and time
There
is
you
one of
go.
them.
Yeah, money comes and goes. Time is gone forever.
That's it. Can't get it back. This is a chart of the euro US dollar. This goes back to March of this year. So this is a 9-month time frame. And
Yeah.
what I'm showing you here is this is the predicted highs and lows I was mentioning earlier. So this shows you, we were talking about how would you place your stops. If you look at the far right of the chart, you can see that big candle. I'll move my cursor over. It's
Yeah.
right here, that green candle. And you'll see that it broke below that predicted low. And so that's where you're going to use these predicted highs and lows to set your stops. Didn't go too far below it, so it depends on how much buffer you gave it. But over a 9-month period, you can see typically market's going to stay within that trading range. And so it's a very effective tool for setting stops and entry and exit points. It's one that, like I said, it's accurate
Okay.
enough that people can day trade with it.
All right. So you place your buy stops above the red and your sell stops beneath the black line.
There you go. See, you're
All
learning
right.
already. That's how easy it is.
I could probably qualify to be a relationship manager.
Well, let's see. You seem like a nice person. You seem like you want to help people be successful. Yeah, I guess you've got the qualifications.
I'm pretty busy. So I want to thank you, Lane. When I first saw the software, I was impressed. I wanted to give you a chance to show it. Perhaps you want to show your website. I know that people could follow you on the Twitter handle @MarketTech, and your website is www.tradertech.com.
Yep, that's right. It's tradertech.com. And if anybody wants to get a free live demo or a free market forecast, all they have to do is they go to the website, tradertech.com, or they can just give us a call. I'll give you 2 numbers. If you're calling from overseas, we have customers in over 120 countries around the world. You'll want to call 813-973-0496. Just say you want to get a live demo or a free market forecast, and we'll provide that to you. If you're calling from the U.S. or Canada, you can dial 800-732-5407, and we'll be glad to show you what we've got. We're very passionate about it. We love helping people. We've helped thousands of people around the world, and it's what gets us up in the morning. It's why my dad started the company, and that's what's driven me to want to take things to the next level.
I wish you and your family and your employees and all your customers a successful, happy, Merry Christmas, and great New Year, Lane.
Thanks,
you.
Dan. Same to you. Appreciate it. Have a great day.
Thank you, man. That's
Bye-bye.
Lane Mendelsohn. Everybody, website tradertech.com, Twitter handle @MarketTech. You guys enjoy it?